Today, I'll bring you up to speed on the Greater Moncton real estate market in 2023. I've got a lot to cover, so I'll get right into it. Let's start with detached homes. The overall number of detached homes sold so far took quite a dip, with a little over 1,800 homes sold compared to a little over 2,100 sold last year. Every month except for August saw a decrease in sales compared to last year. July in particular saw 95 fewer homes sold compared to the year before. We did bounce back a little in August with 260 compared to 224 last year, which was a gain of 36. That may not seem significant, but it was a bit of a standout from the trend, considering every other month experienced a decrease. Now, if we shift to new listings, they too dipped quite a bit. Year to date, we've seen a decrease of 529 new listings compared to last year. It started in March with 82 fewer listings compared to the previous year, followed by 113 fewer listings in April. But the biggest gap was in June, with a whopping 212 fewer listings compared to 2022. In August, we did start seeing a small comeback, and finally in September, we actually saw more listings year over year for the first time since January. Okay, so that's the number of sales and listings, but what about prices? Well, they're interesting. The average prices last year were notably higher, but the gap's been steadily narrowing throughout the year. We kicked off the year with a huge $42,000 gap over last year in January, but now we're sitting at approximately only $7,500 below last year's average year-to-date price. As of the end of September, we're just a little under $351,000. So that's the big picture on detached homes. Next, let's talk about semi-detached homes. Unlike detached, sales have been relatively steady year to date, with only 15 fewer sales than last year. The year began on an upswing in January, February, and March, with more sales than the previous year, but the second quarter, April, May, June, was a little on the soft side, with 35 fewer sales compared to last year. Now, looking at new listings for semi-detached homes, there's a year-to-date decrease of 130 listings this year. That downward trend started in April, with the most substantial drops coming in May, with 25 fewer listings compared to last year, and June seeing 30 fewer listings than last year. So with sales staying relatively in line with last year and listings way down, prices so far for semi-detached homes, as you might guess, are staying up. I guess it's the old law of supply and demand we've been battling for the last few years. We kicked off the year with an average price nearly $49,000 higher than January 2022. Just like detached homes, as the year went on, the gap gradually did get smaller, but as of the end of September, alongside with February, we're sitting at the highest average price of the year, which is over $342,000. The average price of semi-detached versus detached homes continues to blow my mind. The average price of a detached home is only $8,100 higher than a semi-detached. I attribute that to not only low inventory levels, but also the ratio of new construction sales to overall semi-sales. The ratio is pretty high, and in general, newly constructed semis will be listed and sell at higher prices, keeping that average price up. Now, with the residential market in general, overall, the months of inventory are still hovering in the mid 3 months range. Months of inventory is a calculation where we ask, if there were no new listings as of today, how long would it take at the current sales pace for inventory to run out? If the answer is 8 months or more, it's considered a buyer's market. If it's between 4 and 7 months, it's considered a healthy, balanced market. And if it's anywhere from 0 to 4 months of inventory, it's considered a seller's market. Hovering around the 3.5 month range we've been at keeps us in a seller's market, but we're not far from a balanced market. So sellers in particular, keep this in mind when it comes time to pricing your home. Pricing correctly is absolutely key to sell at top dollar with favorable terms in a reasonable amount of time. And buyers, this is good news for you. Depending on your price range, you're more likely to be able to negotiate with sellers, particularly in those higher price ranges. I will say if you're in the 300,000 or less category, there's a good chance you'll still be competing. And interest rates are a hot topic these days. I can be watching the news, talking to a buddy, or working with clients, and sooner or later, interest rates will come up. Up to a few months ago, it had very little to no effect on my client base. It was business as usual. But in the last month or so, I find that's changing. Some people are waiting for rates to lower, and others are revising how much they're willing to spend. When I look at sales by price range, I see the entire range between 360,000 right up to 440,000 is up over last year compared to most other ranges. That to me is a direct result of buyers reducing their budgets. Those same buyers last year probably would have been in the $500,000+ range. The number of sales in that price range, well, in all price ranges, right from 440 to 700,000, in fact, are down. One area I would not have guessed and was surprised by is the 700,000+ category. It's actually up by 20%. That one's a head scratcher. I won't harp on this because only you know what the right move is for you. But one thing I'll say about interest rates is we've been extremely spoiled over the last few years. In fact, the lowest interest rate ever recorded happened in September 2021. You could lock in under 2% for 5 years. That's crazy. The flip side is between that and record low inventory, people were willing to pay a lot more, so that drove prices to new highs for us. I'm no economist, but I'd be shocked to see those low rates for a long, long time, if ever at all. So if you're waiting for rates to drop, I guess my question would be, what if they don't? Or what if they do, but only in 5 years? That's 5 years of equity you could have been building through your mortgage repayments and hopefully property value appreciation over time. And what would happen if rates did drop significantly? Well, that would bring other buyers back to the market who were also holding off, creating more demand and driving those prices up again. Enough about interest rates. So to wrap it up, what I'm seeing is still a healthy Greater Moncton real estate market, very healthy even, but for the most part, the frenzy is over and we're much closer to a balanced market. Sellers, I'm sorry to break it to you, but the days of sticking a sign on the lawn and waiting to see how many offers you get, well, they're over. Making sure you're working with an agent who knows what's going on with the market, can advise you on how to properly prepare your home for sale, and will help you with coming up with a proper pricing and marketing strategy is very important. Buyers, even though we're still in a seller's market, you will have a much better opportunity to find the right home for you and hopefully one that checks off a lot more of your boxes within your budget. So that's it for today. Hopefully you found this video helpful. If you did, feel free to like it, share it, and all that good stuff. Thanks for watching and see you on the next one.